Hey everyone, Steve here from 11ish, where we usually talk about lucrative but sound investment strategies. Today we're going to talk about something different. We're going to talk about what might happen to the market in the next 2 to 3 weeks. And I think it's really important for us to be on the same page. You might not agree with me in terms of the execution strategies, my recommendations, but at the very least, it's important for you to know the current events, what's happening right now, and what it might lead into. So without further ado, let me cue the intro music and let's get started. First and foremost, why do I think there might be a second financial crisis? The closest thing that happened to COVID was the pandemic in 1918. Basically, the Spanish flu had 3 waves. People basically reopened too quickly, and that caused the second wave. And that is essentially where we're headed. I mean, beyond the historical information that we can glance from the Spanish flu, there are 2 major indicators that showing that COVID is not over and the second round might come. So, number 1 is that Beijing, the capital of China, is locking down. One of the most tightly controlled countries in the world is re-locking down. That is incredibly disconcerting because it gives me the impression that we don't fully understand how it spreads and how we can contain it in the first place. The second most disconcerting fact is that it looks like every country is doing their own thing. Whatever they think is right, some are doing better than others, but some countries just don't care because they think that the lockdown will have too much economic impact for the country, and therefore it's more beneficial for their country to on lockdown, right? And we see this in the United States, Russia, we see that in Brazil. Whether they're right or not, it is absolutely a tough decision to make. I sympathize, but it looks like we're about to pay the piper. Furthermore, Trump made a comment saying that he's not going to shut the country down because of a second wave. All in all, I think this is going to fuck the global economy much worse because each country has different expectations, different requirements for the economy to function well, and people are butting heads. All the while, people are dying and getting sick. It's not a good look. So what does this mean for us investors? Well, the first COVID dip cost most companies 40 to 60%, and then it started gaining over the next month or 2. I think that the same thing is going to happen because the whole economy is going to lock down and people are going to sell on mass hysteria. Regardless of whether the company is good or bad, the whole market is going to freak out because they're not going to freak out just about COVID. They're also going to freak out about a recession. The whole economy, because it's global and everything is touching each other one way or another, I think there's going to be a huge drop. I do think that there's going to be a recovery, but at the same time, there is a reasonable chance for us to be sent directly into the recession. And you have professional analysts saying this as well. You should take a second look at making sure your investments are recession proof and ideally avoiding industries that are in the theme park, amusement, manufacturing, automotives, and cruise ships. I mean, I would never invest in cruise ships in the first place because I think it's a boring ass business. And just on a tangent, one of our subscribers mentioned this company, Revolve Group, RVLV. They basically does high fashion, seasonal fashion for both men and women as an online digital store. They're doing great. Their top line looks awesome. They're playing the growth game very well. They're building their brand awareness by being on the right marketing channels and being talked about in a very positive way. But the challenge is they're not COVID proof. They might be high-end luxury in the sense that they might be recession proof because rich people are always going to buy nice things, but I do not think they're COVID proof. And so therefore, that would be the reason why I might want to stay away from this stock. As for me personally, I mentioned theme parks. I am going to hold on to Disney just because the majority of their business is digital. I like their entire picture. 30% of their business is theme park, and that is still billions of dollars. But I think in the long scheme of things, is a great business. And what I'm actually going to do is going to most likely average down. That's how I want to play this. Eldorado casinos. Woof. For Eldorado, I'm really concerned about their operating expense because now it's 2 companies have successfully merged, Eldorado and Caesars, and I think their business makes sense. Their economy of scale makes sense. But if they can't run their casinos because of a shutdown, then I'm gonna fucking lose my pants. So I need to take a really close look at this business and see the growth strategy and basically see what they're gonna do and how they're gonna survive. The second thing I recommend as a stock pick is take a look at Peloton again. In my original video, I mentioned that Peloton was gonna do well right before its earnings. I mentioned in my Taking Wins video that you should sell, which I still stand by my words. But I also said that if COVID goes longer than anyone's expected, then the company is gonna keep doing well because there's nowhere else for people to go. They have quality content, quality instructors. Those things are irreplaceable in many ways. And so I think that they're gonna continue to build brand love, especially when they're doing great things on ESPN to promote their value as well. I think Peloton is worth a second look, and I've personally reinvested. The fact of the matter is, especially where I am in the Silicon Valley, tons of companies, public and private, are cutting down on headcount. It is what it is. No one should be holding on to so much money that they can last for a 12-month crisis. And so I completely understand where Trump is coming from in terms of not wanting to shut down the economy. I don't think there's a good option, and I think the shit's gonna hit the fan either way. And so we as investors, we need to be prepared for that. Please let me know in the comments if this video was helpful for you guys. I really would appreciate some feedback in terms of whether you agree with me, what you might want me to prefer to cover more on. All of these great things, I really appreciate all of your constructive criticisms and feedback. Next week, I'm going to talk a little bit more on the fundamentals of the 11ish approach in investing. We're going to continue to talk about interesting investment opportunities so that you guys can continue to hone in on your chops, find interesting opportunities, and see how that might fit in your portfolio, because regardless of the recession and the economy, there will always be interesting opportunities to invest in. You'll just have to prepare and adjust accordingly. Thanks for your time, and I look forward to working with you next time.